Okay, welcome to another episode of Blockrevision. Today, as I'm in a rush again, the video will be without camera and a bit short and then usually. So I will guide you just throughout the most important topics and sections that will be economic calendar. So the most important economic events that happened and took place yesterday and will take place already today, and right after this we'll jump to trade idea, and I have trade idea for you that will regard currencies, so it will be transaction on a forex market. So I hope you will find it also interesting. Alright, so we are jumping up to trading economics, and we'll just scroll through Thursday's events. Yeah, PPI, that were the events I have already talked about. 8-week bill auction is a little bit lower than it was previously, and 30-year bond auction is higher than it was, so we can find that we are building up an uptrending tendency. For Friday, we have from Great Britain GDP month over month. It's still positive, but we can find that we can find a slowdown since the first half of 2021, when those stimulus has been started to revert. So GDP year over month in Great Britain right now is showing also a slowing tendency. So after this stimulus being pumped into the market, we can find that the economy has quite difficult time considering the full and prompt and vigorous return. And today we could find from Poland that there's inflation rate year over year right now at astounding level of nearly 9%, and month of month 0.9%. So it's a little bit slowing down, but it's really something that may a lot of people wonder where we are going to the heck in the coming year. From US, however, we have retail sales that already been published. It's at negative levels month over month. So it looks like the slowdown caused by Omicron variant, export prices a bit lower, and also retail sales year over year right now. This one, however, is a little bit getting back to higher levels, but rather remaining also stable. So that's it for today's market mover section, and we will just jump into a trade idea. And right here, as I presented previously, I will talk about the currency pair that is in a quite interesting spot right now. So it's Swiss franc to Hong Kong dollar. So it's currency pair that has built quite of a triangle that is in the technical analysis assumed as a continuation pattern, and with I would say the probability of breaking out of this formation in the previous direction that has been set, that is north, is at around 63 up to 65%. Now, this probability is even higher in a bull market. And right now, as we can find, we have entered since beginning of a pandemic into a bull trend on this pair. And why have I decided to trade exactly this currency pair is not only this formation, but also the forex sentiment that is showing us that the USD CHF is at the very much dominated by longs. As we know, USD is also pegged to HKD, so if we are betting against CHF on this pair, we can find that it's also a bet against HKD against CHF. So as we can find, the percentage of longs betting on USD in this currency pair is at around 90%. So that's also a very high popularity of this pair. So it means that this community trend is quite of a clear and also verified. So getting back to also the sentiment that also is quite of a one of the indicator where the money is flowing. We are right now in a neutral position where the market hasn't decided yet whether we are going into a fear or greed territory. So getting back to CHF to HKD. So this direction of CHF is rather putting us in favor of a risk off territory, because CHF is considered to be more risky currency than USD and as well HKD. So regarding this formation, this technical formation, we can find that we are right now trying to get out of this triangle, this symmetrical triangle. Right here, right yesterday, we also have found that after confirming a lower band of a triangle with this very, very strong bearish candle, we have rebounded very firmly and right now confirming the breakout to the upside with a high volume on a breakout candle. So it means this candle of yesterday is the one that is pointing us there is more probability of CHF going upside direction in ratio to HKD. So regarding this, we can also set a trade idea and just set up a trading board. So right now, after this candle being closed on 13th of January, I would like to just set a potential entry point that will be a half, and it will be a half of this move that just have informed us of a potential of getting higher, and it will be at 8.48. Let's however set it a bit higher, as the price not always has a tendency to correct such far after such a strong move. So I would start this position if we just get to this area of around 8.49. The potential from here is being set at, if we just measure this pole of a flag that become a triangle, the potential from there is right from the higher band of a triangle, so it will be right at even up to 9.33 in the August of this year. So it's nearly 6 months bad if we are able to follow the previous or rather repeat the previous tendency. So right from here, let's have a look a bit closer for now. I would put my entrance right at, as I said, 8.49 with a stop loss being set right at 0.786 extension on Fibonacci levels. So I do expect CHF to make such a move with a first real and potentially very good target of it's around 8.83. So it's risk reward ratio at the level of 6.7 and there is a target of 4% or even above 4% on this trade. Okay, so remember about risk management, CHF to HKD for today, and that's it for today's episode. If you enjoyed, just hit the like button and subscribe to the channel if you find my content valuable. See you on Monday.